Thanks, Paul. Reed Corporate, thanks again for putting on the show and everyone for attending here today. It's great to be here. New World acquired the Antler Copper Project up in northern Arizona 3.5 years ago, and it's actually a real rarity in this industry where every step along the way things have got better and better and better. I'll talk you through where we stand. As Paul said, we do have one of the highest grade copper resources in the world. It is 11.5 million tonnes running 4.1% copper equivalent. We have got a critical mass to mine. We are in a fantastic pro-mining jurisdiction. We have enormous exploration upside, yet we're very highly undervalued. Just in terms of corporately, we've got a market cap of $73 million. At the end of June, we had, post $5 million raising to RCF Capital, we had about $7.5 million cash at bank. Significantly, RCF's investment really is an endorsement of this project. RCF started doing due diligence on this project back in September last year. So they took the best part of 9 months following extensive due diligence to make an initial $5 million investment in us. In terms of leverage to the copper price, I note that in early 2021, when copper price ran from $7,500 a tonne to just over $10,500 a tonne, our share price, at a time where we didn't have a resource, we didn't have a mining study completed, in the space of 3 months, our share price went from 4 cents to 12 cents. So extremely leveraged. Now, I would argue we are in a much, much stronger position now with a resource, with a very high-grade resource, with 2 mining studies completed, and in the next couple of weeks, we will be submitting mine permit applications, and in the next couple of weeks, we will be recommencing exploration after about a 6-month hiatus as we've gone through mine design work and mine permitting activities. We have 2 very, very clear corporate objectives. Because of the high-grade nature of the project, then we have a very, very financially robust proposition. The point is that we can make 220 million Aussie dollars a year free cash for 13 years with what we've got. That's without any further exploration. That's just on a base case, $220 million a year, free cash. That's not revenue, that's free cash. At today's copper price, at $8,500 a tonne copper price. We're not forecasting 9,500, we're not forecasting 10,500 copper price. We think it's going there, we think it's going to over 10,000, but we're using base case $8,500 a tonne. With that resource that we've defined, then we have a very, very robust project. And so some people argue, well, Mike, why don't you continue to explore? There's clearly more exploration upside, and I'll talk about that. We are going to continue to explore. But at the same time, by spending just a couple of $1 million over the next couple of years, we will take this project through permitting so that we will be in a position to commence production as we think copper price is going to continue to rise higher, and as we have more and more exploration success. So our 2 clear corporate objectives are to get Antler into production and to continue to explore. In terms of the first one, we could not be located in a better jurisdiction. We're located up in northwestern Arizona. We're about 1.5 hours south of Las Vegas, or about 3 hours from Phoenix. It is very, very sparsely populated where we are. It is remote Arizonan desert, yet we are very well serviced with infrastructure. On a big picture, there's a mine, the Moss Mine, which is a gold mine, located about 50 kilometres to the west of us. The Moss Mine is an open pit, heap leach gold mine using cyanide, all on federal lands, and that was permitted in 18 months. Our intention is to build an underground, not an open pit mine, not use cyanide, not use leach pads, and return 50% of our waste product back underground, so much lower environmental impact, all on privately owned land, not on federal land. So we should have a very, very streamlined path to production. Also significantly, 70% of the copper that is produced in the US comes from the state of Arizona. So it is a very, very supportive jurisdiction. Why did we get involved in this? And it's interesting listening to Falun, because I think there's a lot of merit in going to old deposits. We went to the old Antler copper deposit 3.5 years ago, and we commenced exploration. Now, admittedly, when we got involved, no work had been done at Antler since 1970, and through to 1970, only 70,000 tonnes of ore had been mined. But that ore was very high grade. That ore was running about 5% copper equivalent, so almost 3% copper and 6% zinc. So very high grade mineralisation, but only modest production of 70,000 tonnes between 1916 and 1970. But we saw potential where this deposit, there'd been no exploration at this deposit since 1975. So we saw the potential to make this a lot bigger. Mineralisation outcrops over 750 metres a strike, and indeed there was a single drill hole drilled in 1975 that intersected high-grade massive sulphide mineralisation 550 metres below surface. We saw that there was a lot of exploration upside here. So we took an option to take 100% interest, and indeed after only 18 months we exercised that option. So New World is the owner of 100% of the Antler deposit. And over the last 3.5 years, we've drilled over 130 drill holes for almost 60,000 metres, and we've declared 2 resources. The most recent resource was declared at the end of last calendar year, so in November 2022. And that resource, using a 1% copper equivalent cutoff, is 11.5 million tonnes at 4.1% copper equivalent, with 79% of that material in the high confidence indicated classification. So it's a very robust resource. Indeed, if we want to talk about the robustness of it, using a 2% copper equivalent cutoff, which most people looking for copper would be happy to have intercepts that are running 2%, but if we eliminate all mineralisation that's lower grade than 2% copper equivalent, or on a dollar value, we might say all mineralisation that's worth less than about $180, $200 a tonne. If we eliminate all of that, we're still left with 9.8 million tonnes at 4.5% copper equivalent. So what that's saying is, no matter what the copper price environment that prevails, we have a very high grade, robust resource that will be profitable to mine. Hence, we're taking this to production. Now, to demonstrate the economics, over the first half of this calendar year, we updated our scoping study to evaluate how we are going to develop the mine. We're developing it, as I say, underground only, returning 50% of the waste product back underground as paste fill with dry stack tailings, which is a best practice in Arizona. In terms of developing the mine, we are extremely fortunate to be serviced by extremely good infrastructure. While it might be sparsely populated remote Arizonan desert, there's an interstate highway that runs 15 kilometres away from the project. That is extremely valuable to us. There's a transcontinental rail that runs 15 kilometres away from the project. That is extremely valuable because we can readily haul consumables and concentrate in and out on rail and on the interstate highway. And arguably, even more significantly, there's mains power to within 700 metres of the old headframe here. So we will be operating here on mains power. There is a huge operating cost saving in that. Furthermore, just 40 kilometres up the road from us, there is a town of 30,000 people. So a town the size of Kalgoorlie, 40 kilometres up the road. We don't need a camp. We will be bringing people in and out of Kingman and Havasu City by bus every day, which reduces both our capital costs and our operating costs. Now, when we look at the mine design, our resource base is 11.4 million tonnes. It may seem counterintuitive. Whoops, sorry, I got behind. It may seem counterintuitive, but even though our resource base is 11.4 million tonnes, we envisage mining 15.5 million tonnes. That is because the resource is so coherent. It is one pod of mineralisation, laterally and vertically continuous, and always high grade. So we anticipate mining 93% of that resource with some planned dilution, which sees us mining 15.5 million tonnes of mineralisation over an initial 13-year mine life. That's steady state production of 1.3 million tonnes per annum at a diluted grade of about 3% copper equivalent. So very high margin material. The production profile will see us produce 16,500 tonnes of copper metal in concentrate each year and additional zinc, lead, silver and gold that equates to another 16,500 tonnes. So about 34,000 tonnes of copper equivalent metal each year. A sizable, not huge, but a sizable, but most significantly, it's going to be a very highly profitable operation. To do this, we have assembled a portfolio of privately owned land where the deposit outcrops on privately owned land, and immediately to the south and immediately to the east of the deposit, we have options to purchase privately owned land, and 100% of our disturbances are going to be on that privately owned land, where we have the right to mine and we have the right to construct infrastructure, which really streamlines mine permitting. In terms of margins, then each tonne of ore that we mine, so if we're mining 1.3 million tonnes of ore each year, each tonne of ore will be worth about almost $200 per tonne. And our operating cost is just under half that. So our operating cost after capital, after sustaining capital, is forecast to be $97 a tonne. That sees us with a production profile of around 33,000 tonnes of copper equivalent metal a year at a cost of $1.68 a pound on a copper equivalent basis. But if we subtract all of the value of the zinc, the lead, the silver, the gold that we will get paid for, then we have negative cash costs. Negative cash costs of negative 50 cents a pound of copper, or negative $1,100 a tonne copper. So if the copper price is $8,500 a tonne as it is today, then we'll actually get paid $9,600 a tonne for those 16,500 tonnes of copper metal that we make each year. Pretty easy to do the economics on that. Just multiply the copper price by 16,500 tonnes, and that's our margin. What about CapEx? Because of the grade, we can develop this project for very, very modest CapEx. $250 million might sound like a lot, but in this day and age with cost inflation, it's modest CapEx. And indeed, of that $250 million, we've included $44 million for contingency. So we've included a fair bit of slack in that capital cost estimate. So in terms of the economics of the project, over that initial 13-year mine life, without any further exploration success, and I'm about to talk about the exploration potential, but without any further exploration success, that project generates revenue of over 4 billion Aussie dollars and free cash after capital of over 2 billion Aussie dollars. Again, assuming $8,500 a tonne copper, which is where the copper price is today. Or annually, 150 million US or 220 million Aussie dollars per year free cash. Very, very robust project. IRR 40%. Now, even though we have a very robust project, it's really the exploration upside that excites us about where we stand. We've been drilling for 3.5 years. 95% of our drill holes have intersected high-grade massive sulfides. 100% of our drill holes have been drilled over 600 metres of strike. We've now drilled the deposit down to 850 metres below surface. They are the only holes that we've drilled on the project. We have a suite of land hole, a package of land that extends over 7 kilometres of strike, and at one end is the Antler VMS deposit, and up in the north end of that suite is the Copper World VMS deposit. Where there's 2 VMS deposits in one province, there's likely to be 3. And where there's 3, there's possibly going to be 4. I repeat, we've only drilled within 600 metres of strike. And the reason we've only drilled in that 600 metres of strike is because as we go deeper and deeper and deeper at Antler, we've been intersecting better and better mineralisation. We can see here a long section that shows some of our deepest intercepts in the most recent drilling that we've undertaken. So the deepest hole on the project is intersected 21.5 metres at 5.5% copper equivalent. And indeed, adjacent to that, there's another intersect that's intersected 10.7 metres at 13.5% copper equivalent. Clearly the deposit is open at depth. But having now been through the mine design process, we see that any additional mineralisation we find below that, below these intercepts, then that won't be incorporated into the mine schedule until year 10, year 11, year 12. So the value for us now comes from discovering additional mineralisation along strike from the deposit as opposed to deeper mineralisation at the deposit. Progressively, as we're mining out the 11.5 million tonnes of reserves or resources that we have here, then progressively we will continue to explore deeper and deeper, particularly as we get the decline down deeper and deeper. But for now, the quantum leap will be finding additional mineralisation that's shallow, that can be trucked to the processing plant that we are going to be building at the Antler project. So initially, we are going to be targeting these lookalike targets. They're extremely strong copper in soil geochemistry anomalies, coincident IP geophysical anomalies, and for the most part, there's extensive historic workings over these areas, but no drilling whatsoever over these lookalike targets. We will commence drilling them in early October. Even if we find 1 million tonnes at one of these targets, then that can be readily trucked to the centralised processing plant that we intend building at Antler. But if we find 5 million tonnes or 10 million tonnes or 20 million tonnes, then we can look at a staged expansion of that processing plant. And indeed, with that in mind, we've also been assembling a portfolio of land 75 kilometres to the southeast of us at a project that we call Javelin. Now, 75 kilometres is readily within trucking distance of the Antler project, providing we make discoveries of high-grade ore. The reason we're in here is because there's the same age, same type of mineralisation, Proterozoic age VMS deposits sitting to the south of the giant Baghdad porphyry copper mine that Freeport is mining. There's 6 past producing mines in this belt, all of which are running 3.5% copper and 7 to 12% zinc. We've assembled a portfolio of over 4,000 acres in this area. Recently, just as we did at Antler, recently we completed surface geochemistry, recently we completed IP. We have defined a very, very strong and very large, 1.2 kilometres by 1 kilometre long, extremely strong IP anomaly that sits immediately under outcropping mineralisation in exactly the suite of rocks that hosts those other 6 past producers. We will be drilling that before the end of this calendar year. It is an extremely high priority target to us to drill because we see that discovery here can provide additional feed to that centralised processing plant we intend building at Antler. So from here, what are we doing? We're going to be drilling for the next 2, next 3, next 4 years to expand the resource base. There is huge value to be had by continuing to expand the resource base. We've got exploration potential at depth, we've got exploration potential along strike, we've got exploration potential 75 kilometres away. As we expand the resource base, our company will be more and more valuable. We will be in a position to build either a bigger processing plant or a staged expansion of the processing plant and or having a longer mine life. So there's huge value for doing that, particularly if it's high-grade mineralisation. But through that, we will complete a PFS, a pre-feasibility study, towards the end of this calendar year. That will roll directly into a definitive feasibility study, and we're anticipating early construction of the decline in early 2025 with a view to being in production shortly thereafter. So just to wrap it up, New World is truly set for success. We're operating in one of the best jurisdictions in the world. 70% of the US's copper comes from Arizona. We have extremely high-grade mineralisation. Paul Howard, analyst at Canaccord, regards our deposit as the 30th highest grade copper deposit on a copper equivalent basis globally. Now, it's not the largest, but it's a very high margin project because of the grade, and it's modest capex because of the grade. We're a near-term producer, but we've got considerable exploration upside, and I would argue with a 73 million market cap with $7 million in the bank, we're heavily undervalued. Thank you.